heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from San Francisco, this is Bloomberg Technology. Coming up, I sit down with the CEO of Lyft, president of Shopify, and COO of Reddit, and we break down those companies' earnings results. Plus, we stick with earnings as Airbnb sees a record plunge on a weak outlook. And we dig into Disney as the Mouse House offers a mixed picture in its earnings. Let's check in on the markets. The NASDAQ 100 up for a second consecutive day by... Actually, no, I take that back. I'm wrong. It's down 0.2%, how things can change in a session. The story right there is really about monetary policy. You know, and on a 3-day basis, we're flat. We're slightly higher in the session. We're still thinking about Monday and the sell-off that happened on growth concerns and monetary policy intervention. So overnight, the Bank of Japan basically said, we won't intervene with a rate hike in the event that markets are unstable. And that's kind of having it not much to do with tech. There's one big tech name that is moving, and that's Airbnb. Check out this chart. So in the session, Airbnb is on track for its biggest drop ever. We're worried about the outlook. We're worried about what Airbnb had to say about its peak holiday season, even though some executives took to the social medias to tell us things are all right. Let's talk about Airbnb and bring in Bloomberg's Mandeep Singh, senior analyst at Bloomberg Intelligence. So what they said was moderation sequentially of growth. And the growth wasn't that good in the quarter gone. So if you extrapolate, you're basically saying, hold on, this is the best time of year normally for Airbnb, the summer months. We're worried about what they're saying about business traffic.
Yeah, look, and you're right. I mean, given it's Olympics and, a lot going on in terms of holiday planning, they talked about shortening booking windows. And to me, the biggest risk with Airbnb is not that they don't have a great moat. It's more about the saturation in the alternative accommodations market. And whatever new products that they have launched, whether it's rooms or experiences, which they have had for a while, hasn't really driven incremental growth. So what they told us last night was, look, the room night growth will be mid-single digit, and EBITDA growth will actually taper off because they plan to invest more to expand supply in new areas in Latin America and Asia Pac. And I think all those are signs towards penetration being high in their existing markets, and they just have to find new markets if they want to keep growing in alternative accommodations. Or perhaps they need to make an acquisition, which I won't rule out given the strength of Airbnb's balance sheet.
Okay, so Mandeep, your stock's down 12 to 14%, the most on record. What do you do if you're the CEO? You go on social media and say it's a great time to buy. Would you agree with Brian Chesky's thesis here?
I mean, he had a floor last night and during the earnings call to talk about the plans, and nothing we heard was very exciting. Look, long term, as I said, this company has a great moat. It clearly is a category leader in alternative accommodations, but can it keep growing double digits? And I think there are question marks. They can do it at least in the next 2 to 4 quarters.
Bloomberg's Mandeep Singh at Bloomberg Intelligence. Thank you. I want to get more on the market outlook as equities trade broadly in the green with Bloomberg's Emily Grafeo. I don't know about you, Em. I'm kind of recovering a bit from Monday still, the trauma of a near 3% decline on the NASDAQ 100. But in the market, there's the growth concern, there's the central bank policy concern, and then there's probably earnings. What's the outlook of all of that in aggregate?
Well, the outlook is that the volatility is not expected to subside, even though we are seeing this market rally yesterday and at least today. When you look at the VIX volatility index, typically when we see a spike like we did on Monday, that means that for the next several trading sessions and even up to weeks, we'll see these big up days and these big down days. What's interesting, this is Bloomberg Technology. We had been talking so much about a rotation into smaller cap names, value names a few weeks ago, and we're actually kind of seeing that trade disappear now that markets are rallying. Technology stocks are rallying the most. You look at the NASDAQ 100, at least today, up almost 2%. The Russell 2000, which was outperforming tech, is only up about 0.8%. right now. So, a few days ago, we were talking about, is tech no longer a safe haven? Is that no longer a place that investors want to hide? But it actually seems like we are still seeing an appetite to buy those mega cap tech stocks.
And we remind our audience, NVIDIA doesn't report until August 28th, and everyone's kind of treading water till that point. Bloomberg's Emily Grafeo, thank you very much. Aside from this week's massive sell-off, some of the world's biggest equity hedge funds lost hundreds of millions of dollars from piling in to popular tech stocks amid the stock rout that hit markets in around mid-July. Bloomberg's Hema Palmer has been tracking it. There are some specific single names in that industry who were probably more hit than others. Who are they and what happened?
Yes, so we saw a lot of pain over at LightShed, down 9% in 1 month alone of July. Still up 40 for the year, but definitely a difficult month for them. That's likely due to their very big position in NVIDIA. As of March, that stock accounted for about 17% of their portfolio. They also have sizable stakes in other of the Magnificent Seven. When we look across the world, the hedge fund space, specifically when it comes to the equity funds, you do see this concentration in Microsoft, Amazon, NVIDIA, and some of the other big tech names that have really struggled this month.
Bloomberg's Hema Palmer with the data and the hedge fund ownership of big tech. Really appreciate it. Thank you. So coming up on Bloomberg Technology, we're going to be joined by Reddit's COO, Jen Wong, to discuss the company's results and their outlook for sales growth. An interesting conversation. Jen, really at the heart of some of the deals that Reddit is doing. One other name that I'm looking at is in the chip sector, Micron in particular. Let's bring up the stock and take a look at it. There's several stories out there. One largely around share buybacks. The company basically saying that they may resume a stock buyback program to offset some dilution from their employee stock comp programs. The stock up 2.7%. Remember, we've covered this really in the context of high bandwidth memory recently, but also it's one that is in a lot of end markets, smartphones, DRAM and NAND flash being one as well. This is Bloomberg Technology. Reddit beat analysts' expectations on sales growth after expanding its data licensing partnerships and investing in new advertising technology. The company's revenue forecast for the third quarter also beat estimates. Delighted to say that Reddit's COO, Jen Wong, joins us live here on Bloomberg Technology. The stock is lower, an impressive set of numbers for a relatively newly public company, and everyone's kind of looking at the outlook and trying to extrapolate out, understand the world that Reddit's operating in. Could you just give us a sense, Jen, in your conversations with advertisers, what the rest of the year looks like, the environment looks like, and why Reddit may or may not fare better with those advertisers compared to other social media platforms?
Yeah, thanks for having me. Look, the markets are the markets, but when we look forward to the back half of the year, I think advertising is a pretty stable market. And what drives our growth is what drove our growth in Q2, which is delivering against our consumer and ad roadmap and continuing to drive value for advertisers. So I think what's driven our user growth has been the work of making Reddit better, making it easier to access posts, easier for people to connect with communities, easier for mods to do their moderation. And that when we make the platform better, the users grow. And from an advertising perspective, it's been all the investments we made in our ad platform to improve usability and scalability so that we can address and serve more advertisers and grow the advertising base. Next is delivering quarter-over-quarter performance for our advertisers, and then delivering things that only Reddit can do, that are Reddit unique, like the Ask Me Anything format refresh, or testing things like ads and comments. Those strategies are working for us, and we'll continue executing against that roadmap as we head into the back half of the year, and we feel really good about the yield on that roadmap.
Okay. Jen, you've been very busy since last we spoke. I think principally about the deals with NBA, NFL. What I'm trying to understand is how those kind of video-focused partnerships contribute to your ad revenue or ad growth going forwards from this point.
So Reddit is home to an incredible group of fan communities, and the sports communities are some of the most active and engaged on the platform, and that they're global. And so the idea of having those partnerships with the sports leagues was to bring in special content like highlights, like access to players for AMAs or to insiders for those communities to enjoy. So that is really our starting place for it. Now, what's great is that does create an opportunity for advertisers to support that content. Some of those advertisers support that content and are aligned with that content on other platforms like television, et cetera. So it is a really nice win-win-win for users and communities and Reddit and advertisers. It's early. It's a program that we're testing, and we've done some work with the NFL. Now we've expanded it to more leagues. We are excited about it because I think the communities are excited about getting access to that content. And if you think about it, we've done partnerships with US-based leagues, but there are so many more sports and so many more global leagues that we could engage with. And then the fan communities, they really go beyond sports on Reddit. They're deep
Jen,
meeting entertainment.
I am a long-serving, suffering, and passionate Chelsea fan in football, what you'd call soccer, and I dive deep into Reddit when I want to see what the fan base wants to know. You and I have discussed previously licensing of data to the AI companies, Google, OpenAI, but a few months have elapsed, and I'm wondering if you now have a better sort of vision for the long-term potential of that business model away from advertising.
Look, I think that landscape is still emerging, and it's still early days for AI. So it's a long arc. We've been, I think, very thoughtful about how we structure partnerships. Our view, they're not 1 year, they're not long term, they're sort of midterm partnerships that allow us to learn and find a way to work with this new area and see how it goes. So I don't think, I think we still continue to learn in this process because I think it's a very long arc. I do think some of the things that we've done have established a foundation for having these partnerships. So if you look at our public content policy and you look at the changes that we've made, I think we've made it really clear how we want the ecosystem to work because we are stewards of Reddit's data, and user privacy, et cetera, is really important in allowing scaled access to Reddit data.
Yes. Jen, when I sit at my computer in the morning, I use various search functions. It's often a Reddit post that will come up. It's quite easily discoverable, specifically Google search, but going forward, ChatGPT. There are platforms where that's not the case. Bing. Do you have a clear strategy for search expansion for Reddit content?
Now, look, we have been beneficiaries of the open internet. We believe in the open internet and allowing people to get access to important information. And Reddit's corpus has some of the best and most important answers regarding everything, product, services, life, et cetera. So we want Reddit to be open, but we have to have a set of rules for doing that. And search and summarization and AI and data usage, they're sort of all merging, right? This is part of what's changing in the world right now. So I think our view is we will have a conversation with anybody about having access to the data, but we've been very clear and transparent about our rules, which are our public content policy and protecting user privacy, being good stewards of Reddit's data, and that we have to have a conversation where those policies and rules are respected, and then there's commercial alignment. So we're having conversations with every player, large and small. Okay. And I think we've made it clear, that what the rules are and how to make this work. And the fact that we've signed deals, I think, is a sign that we're sensible. There's a path here to do that.
Jen, the stage is now very much set for a presidential election race for November. How does that impact Reddit? Do you kind of foresee boost from political ads or even just activity on the platform centered around the election?
Yeah, we actually are not a big player in political ads. We never have been. Politics is obviously a big area that our communities engage with on Reddit, so we do see conversation. But what I would say is on Reddit, because we have so many diverse communities, different communities have moments at different times. This is a presidential election year, so politics is, going to be a little bit bigger, but then Olympics was a little bit bigger, and then there are seasons where other communities kind of have their moment. What happens with Reddit is that kind of smooths out over time. So a community might be having a moment at one time, then another community, then another community. But if you look at the arc of Reddit's growth, it sort of is all smoothed out over the trend.
Reddit COO Jen Wong, it's great to have you back here on Bloomberg Technology. Thank you very much for your time. Now, coming up on the show, we're going to break down Shopify's earnings results with President Harley Finkelstein. That's coming up next. Back to kind of AI and the server space. Look at shares of Supermicro, down pretty significantly, 16%, having initially surged in after hours. Revenue and profit missed estimates in the quarter, but they gave an outlook that was like billions of dollars above what the street was expecting. I think the market's just trying to make sense of like what's happening. Remember, Supermicro basically assembles the servers that go into rows in data centers. Interesting move. This is Bloomberg Technology. It's time for Talking Tech, and in the news, SoftBank announces a $3.4 billion buyback. The Tokyo-based firm said it would purchase up to 6.8% of its free-floating outstanding shares through August 7th of next year. The move comes as CEO Masayoshi Son prepares for a large-scale push into AI and semiconductor investments. Plus, Hewlett-Packard's $14 billion deal to buy Juniper Networks gets the okay from UK watchdogs. The Competition and Markets Authority cleared the purchase after investigating if it would lessen competition in the UK. The deal was similarly passed just last week by the European Union. And Sony raises its revenue and profit forecast for the fiscal year to March. The company saw a successful quarter in its music and gaming divisions, with operating profits at $1.9 billion. Its PlayStation division saw a lift, but its PS5 consoles sold just 2.4 million units, significantly below the 3 million units that analysts had expected. Let's get back to the earnings story and take a look at Shopify. The global commerce company reported earnings results before the opening bell this morning, beating estimates. Shopify President Harley Finkelstein joins us now for more. Good morning to you, Harley. It's good to catch up and have you back on Bloomberg Technology. Things are going right for Shopify. The environment's hard to understand. Is there something specific that Shopify is doing better or well in that environment?
I think so. I think absolutely. So first and foremost, I think we've earned the trust of millions of merchants and businesses all over the world. We announced, a month or so ago, I announced that we've now powered over $1 trillion with a T in cumulative GMV since our inception, which for us is really incredible. But I think we're not just helping merchants compete. I think we're propelling them to victory. And in terms of how Shopify is doing, in particular, I think these results demonstrate that we can create the serious combination of both growth and profitability. When you exclude the sale of logistics, revenue is up 25% for the quarter to $2 billion.
Yes.
That's our fifth consecutive quarter of at least 25% top line growth. When you look at free cash flow, our free cash flow margin more than doubled from last year, from 6% to 16%. Now, in terms of sort of the more macro, sort of macro question that you're asking, look, from our vantage point, I'm hearing from other companies what you're hearing as well, but from our vantage point, our merchants, the merchants on Shopify, are outperforming others in the market. They're growing at healthy rates. We're adding more merchants every day, and I think as a result, we're gaining more market share.
Harley, real quick, I just want to jump in because it did go well for you in the quarter. You've kind of been suffering from slowing growth in prior quarters, and your emphasis was on marketing, but something jumped out. You talked about a partnership with a social media platform that really helped out. What platform was that? What were the specifics around that as a catalyst for you?
Yeah, I mean, the truth is, the way that we think about marketing is the same way we think about product, Ed. We don't necessarily, it's all about data. And so when we see a particular marketing opportunity, we take that opportunity. And the way that we think about all our marketing channels is these are levers. So in Q1, we did an experiment with a new emerging marketing channel, emerging social platform. We put some money to work. We saw great return. We doubled that in Q2, and we saw about a 51% increase in new merchants from that channel. At the same time, we saw other channels that historically did perform well not perform as well, and so we pulled back on it. But the way that we think about our marketing is as this incredible data-driven engine that allows us to not just focus on SMBs in English-speaking countries, but you think about our point-of-sale business, our B2B business, our international business. We're able to deploy capital to have the highest return on those investments, all within an 18-month average payback. And that's the sophistication that we've built into the growth levers of Shopify.
So which big social platform was it?
We don't go into specifics on that. It's just an example of something that we're constantly experimenting with. There's not that many emerging social platforms, so I'm sure you can figure out which one. But the point actually that we want investors, we want the street to take away is that we are always looking for new ways to grow the business. And again, 5 consecutive quarters of above 25% top line growth while being profitable. There's not too many companies that can do that at our size and grow their market share. And I think this is the best version of Shopify you're seeing right now.
I've spoken to so many businesses, small and slightly bigger, that use Shopify. I get the benefit of it. So this is about discoverability, right? Adding new merchants or markets to your platform. But let's do the math. If we won't name the social platform, what ballpark was the spend? Because the return on that campaign seems to have been very definitive in the quarter.
Well, think about this. When we started we've been public now for just over 9 years. Initially, we were focused on e-commerce for SMBs in very specific regions. We now have a point-of-sale offering that surpassed $100 billion in GMV. International, for example, over 50% of merchants that joined in Q2 on Shopify were from outside our core English-speaking countries. 2 years ago, we didn't have a B2B product, and this past quarter, B2B GMV grew 140% year on year. So it's not just getting more people to use Shopify, it's more people in more geographies to use different products, and that is leading to the growth that you're seeing at the same time as being focused on profitability.
Harley, we enter the summer months, and then we have the holiday season here in North America. Do you kind of market hard in the summer in the hopes of having business transaction later in the year? Real quick.
Look, I think the key is that I do think the holiday will be very good, but because we have so many different verticals of merchants, we have Figs doing scrubs and pet products from BarkBox, we have Nestle and Heinz and Mattel and Staples all using Shopify. We're not relying on one particular type of merchant, but I think that merchants that are on Shopify are doing disproportionately well.
Harley Finkelstein, president of Shopify. Great to have you back on Bloomberg Technology. Thank you so much. So coming up on the show, we're going to hear from Disney's CFO, Hugh Johnston, on the company's earnings results. An interview on Bloomberg Television earlier today you do not want to miss. This is Bloomberg Technology. Welcome back to Bloomberg Technology. Ed Ludlow here in San Francisco. Disney gave a mixed picture as it reported third quarter results, with weakness at its famed theme parks, though it made its first ever profit in streaming. But with so many bundles, are consumers getting streaming fatigue? Disney CFO Hugh Johnston joined Bloomberg earlier. Listen to this.
Consumers do seem to appreciate having a limited number of bundles. Now, what we've tried to do with our own offering is offer the individual pieces, or if people want to get a discount by bundling, we're happy to do that. So that said, I think you do see a trend where there's probably going to be a few big competitors in the marketplace in streaming, as we see right now between Netflix, Amazon, and ourselves. And then there'll be some smaller competitors out there, and they'll have to decide how they're going to run their businesses.
Are you concerned that consumers right now potentially are going to shrug off the price increases? Because what we hear from a lot of companies is that we do see consumers trading down. Why do you think they're willing to pay for a higher price point?
Well, I think the biggest reason is it's always important to focus on this. The consumer receives value, and what they pay is price. And because we're delivering so much value, I mean, really an enormous amount of value in terms of the hits that I just mentioned. But then in addition to that, the combination of Disney Plus, Hulu, and then we're going to have an ESPN tile and ultimately ESPN flagship on our streaming service. That's a huge amount of value for consumers. And as they're allocating their entertainment dollars, I think they're going to view us as a great place to put them.
That was Disney CFO Hugh Johnston. Take a look at Disney shares. We're off session lows, but we're down 1.9%. The company also commented on its negotiations with Hulu in a filing today, saying it may have to pay $5 billion more to acquire Comcast's 33% minority stake in Hulu. The two sides have disagreed over the fair value of Hulu and entered into arbitration proceedings. The stock, by the way, down 2% so far in the year. Let's discuss all this with LightShed partner Rich Greenfield. Let's park Hulu for 1 second. First ever profit for streaming. Is this the Rich Greenfield slow clap, or are you not so overwhelmed by that news?
When you see subscriber growth slow effectively to a halt, and the price has gone up pretty dramatically, it's pretty clear. I guess in many ways it's sort of this, hey, we don't know how to get more subscriber growth, so we'll raise the price and hope that people won't, and we'll even cut back on programming. There's obviously a lot less programming. Disney's essentially going to rely on their movies to drive the streaming service and hope that the movies are strong enough when they flow to the streaming service that people don't cancel, because they're not expecting a lot of growth in subscribers over the next few quarters. And so it's basically trying to, get to profitability, drive profitability of the existing base. But it doesn't really seem like there's a tremendous growth story here. And I think that's sort of, look, everyone's focused on the parks. I don't think anyone's really focused on Disney Plus at the moment. The streaming is a nice data point. I think it's less about getting to profitability and how big a business can this actually be, Ed? Can this be a multi-billion-dollar free cash flow generating business the way Netflix, or is this, going to essentially tread water, at a low single-digit margin? I think that's what investors are really going to focus on over time.
I mean, you and I have discussed in the past, right, achieving profitability by cutting cost out of the equation. So let's bring it back to Hulu.
What you really want to see is people. You really want to see people who are so passionate. They love this service. They're willing to pay more because they're spending so much time. You want to see consumer love. And based on that love, you can keep raising the price, getting more people to subscribe because there's great buzz and word of mouth. That's not what's happening here, nor any of these other streaming services. So
then let's talk about Hulu. I just finished Star Wars Acolyte on Disney Plus, and like everyone else, I loved The Bear on Hulu. We did the reporting on the negotiations for that, the remainder of Comcast's stake. Is it important, if the idea is to achieve volume and get stuff that people want to watch, do you see Hulu as being sort of something that needs to be resolved as part of that?
I mean, Hulu is going to be resolved. We're just talking about the number now. And I think investors are, expecting several $1 billion, whether it's 4 to 5, we'll obviously see. But I don't think this is, I think obviously probably Comcast would love more, Disney would love less, but I don't think investors are stressing over what this number ultimately is. Investors are just surprised that the option was exercised last October. I think it's sort of crazy that we're still talking about this not resolved here in August.
Rich, if you could ask one thing of Bob Iger or give one piece of advice to him to fix this in a way that you think would be positive, what would that be?
Look, I think the bottom line is if Disney is really serious about being a long-term, and you heard Hugh saying they're going to be, in the clip you played earlier, if they want to be a long-term winner in the streaming game, it's not about discounting through bundling. It's not about cutting back on marketing. What they really need to do is invest very aggressively. Stop playing this near-term Wall Street game of trying to get earnings growth. They need to invest aggressively in making great content all the time that gets consumers to engage with the Disney streaming platforms every single day for hours a day. That should be their North Star, versus trying to figure out alternative ways to manage churn. That's what we'd like to see. And look, you've got all of these theme park concerns that are sitting with the company right now. That's what investors are really worried about is how did the theme park slow down this fast in the span of just the last few months when Disney historically has pretty good visibility?
Rich, I want to get some time to talk about another name, Reddit. We had Jen Wong, COO, on the show earlier. Very sort of patient, sanguine, calm about the ad environment, but sees a lot of opportunity in sports. I know that you like that name a lot.
We do. I mean, if you think about what Reddit is, they really understand what consumers are interested in. And they've got one of the biggest companies in the entire world, Alphabet, Google, is in their corner. You can't do a Google search and not see Reddit results rising higher and higher and higher. Google's paying them for AI. Like, Google is a firm believer in Reddit. If Google believes in Reddit, everyone watching this show and investing should believe in Reddit. Like, I think that is a really important data point, is that there is this increasing visibility Reddit's getting within Google. And Jen Wong, who is now building out an ad business, Reddit was very slow to get going. They've got it going now. And we've seen other companies, whether it's Snap, Pinterest, go back, X, which used to be Twitter. When those companies crossed $1 billion, getting from 1 to 3 can happen very, very rapidly. And especially at Reddit, where they really know who you are. They don't need third-party cookies or data. They know exactly who Ed and Rich are. They have all of this interest data because you are searching Reddit for a topic, whether it's the Giants or whether it's video games. Like, they really know who you are, and it allows for really well-targeted advertising. I think Reddit is a must-own stock. We just put a buy on it with an $84 price target. I know people are worried about the lockup ending on Friday. It is a great opportunity. People are going to regret not buying it today.
LightShed partner Rich Greenfield, really great to have you here on Bloomberg Technology. Really appreciate it. Thank you. So coming up on the show, we keep the earnings conversation going with David Risher, the CEO of Lyft, discuss the company's earnings results, which reported before the opening bell this morning. Timely. This is Bloomberg Technology. Let's get back to earnings and Lyft. The rideshare company reported before the bell this morning. CEO David Risher joins us live from New York City to discuss. And the basics of it are that bookings, the outlook missed estimates or street expectations. The stock is down significantly. What is happening right now with Lyft, the environment that Lyft finds itself in?
Yeah. So, hey, Ed, it's good to see you again. I mean, look, to me, it's a little curious, right? And this is sort of the way the world works sometimes. So we just had our first profitable quarter ever, which is an enormous accomplishment, thanks to a lot of work with the team. Revenue grew 40% year on year, bookings and rides around mid-teens, 17%, $256 million of free cash. So, and service levels that are fantastic, fastest pickups we've had in a long time, fastest or more drivers than we've ever had. So all those things are incredibly strong and they indicate a strong marketplace. And we reiterated our full year guidance and our multi-year guidance as well,
yes,
mid-teen growth. So all those things are good. I think what people are looking at is they're seeing what I would consider to be, incredibly small, sort of kind of adjustment around what we've said about the future, the next quarter, the next couple of quarters. And this to me sort of signifies, sort of the world we live in. Like the things that we think about are 160 billion rides in the US in total, private cars. And we are little by little, in a very, very disciplined and customer-obsessed way, growing our business. I think Wall Street sometimes looks at short-term things and gets a little bit overly focused on that. I'm thinking about the long term and super excited about the prospects.
David, there's some David Risher strategy and plans that I see playing out, like price lock, a paid feature. That's going to have an impact maybe on the top and bottom line, but why is that the plan for you?
Yeah, so price lock is a way for riders to lock in a price, just like it sounds like, on the same route and same time every day. It's really meant for commuters. And it's available today, by the way. I encourage everyone to check it out. It's kind of in soft launch. And the idea is it takes away that what I think is one of the most hated features of all rideshare, which is surge pricing, right? And we're sort of trying to get rid of it. We can never get rid of it completely, but we can certainly give riders a way to basically pay a small subscription fee and lock themselves into a consistent price. I think it's great, and I think it's the sort of thing that's going to grow the business in the long term. Of course, it's an investment, right? And you always, invest in new features that you have a lot of conviction around. But this, again, is our customer obsession, is what drives profitable growth.
Okay.
And again, we're profitable now, and we think this is going to be a great growth driver for us.
Advertising is a battleground as well. I am so familiar with the Lyft app, but why is advertising the way to go? And with who? With what? Right? You think about parallel industries.
Yeah. So, think about, of course, let's zoom way out for a second. Since the history of advertising, brands have tried to come up with new ways to talk to their consumers, right? And 100 years ago, maybe it was billboards, then maybe it was radio ads, then maybe TV ads, obviously more recently, internet advertising. We see this kind of mobile advertising, literally advertising that comes to you in the car where you're going, as an incredibly important, effectively a sector that we're really going to help build out. And because if you think about it, and reflecting on some of the earlier conversations you were having around Reddit, for example, we have an enormous amount of first-party data, right? 2 million rides a day, every one of them going to a 7-Eleven or a Starbucks or a, whatever it might be. And that's first-party data that's very indicative of what it is that riders want to do. And so our media business has grown significantly. We're up significantly year on year. And we're really optimistic that it's going to be a whole new form of advertising and media that'll go super great.
David, when I reported that Tesla was delaying its robo-taxi event to October, the shares of your company jumped in that session. The Vision is a proprietary app from Tesla for ride-hailing, but a fleet of cars that drive themselves, Teslas. Your stock went up on the basis that everyone was like, okay, the competition from Tesla's not yet coming. Just your latest thinking on that, please.
Yeah. Look, I think AVs are going to be great for Lyft. I really do. And I think it's because we're going to be the best way to commercialize what is a very, very expensive asset. Different companies will try different things, but I think largely you'll have a lot of OEMs doing a lot in the AV space and wanting them on our platform because of millions of rides, all the technology we have to incorporate cars in our platform and so forth. I don't want to comment on Tesla. I don't know. We'll see kind of how that goes. But I do think that creating your own thing, a kind of closed network, it's a fraught strategy, and maybe a different strategy would be to figure out a way to get your cars that you've built and your technology, as broadly available to as many as possible.
David Risher, the CEO of Lyft, thank you so much for joining us in the studio in New York. Thank you. Now, shares lower of Rivian after the EV maker's second quarter revenue missed analyst estimates just. Cash burn for the quarter came in bigger than expected. Earlier, I sat down with the CEO, RJ Scaringe. Listen to this.
We see that both through the excitement of our customers directly, but there's lots of ways to measure this. And we just had J.D. Power does an annual appeal study. We came out as the #1 brand this year. We had a #1 ranking on a J.D. Power study last year. So the reaction to the product's been great. We've in the second quarter, we went through a big refresh to the product where we've now launched what we call Generation 2 of that vehicle, of the R1T and the R1S, where we made significant improvements in the product, but also took a tremendous amount of cost out of the vehicle.
RJ, the kind of summary of the earnings print was that all of the guidance previously issued was reiterated, and there's a lot of positivity around that. Very simply, loads of people asked me to ask you, can you define what modest gross profit means, or what you're defining it by in order to achieve it?
Yeah. Ultimately, this has been the central focus for us as a company, as a business, is driving cost efficiencies into everything that we do, into our bill of materials, into how we operate and run our plant, and ultimately driving towards getting our production of our R1T and R1S to positive gross margin, ultimately to have the business get to positive free cash flow and profitability. So there's a whole series of steps we're making along the way in terms of improving costs, but the biggest singular step that we've made is what we did in the second quarter. We took the plant down for about a month, while we made meaningful changes to the operations, and importantly changed a significant portion of our supply base out to new suppliers in conjunction with a number of design improvements. And all of that comes together to take us to a place where the incremental contribution of every vehicle we sell is positive, and that's that's what we're driving towards. That's where we continue to guide towards for the fourth quarter this year.
In the first instance, sorry, Matt, I was just going to hold RJ to account on that one and say, in the first instance, is it just like more than zero, or single digits gross profit? I think that's the answer we're looking for.
We haven't provided a specific number, but certainly by saying it's positive gross margin, it's more than zero. Our objective, what we've guided to for a long time, we continue to maintain this guidance, is the long-term margin profile on R1 should be around 25%. And so that's what we, beyond just this fourth quarter performance that we're tracking towards seeing how we continue to improve in 2025 and beyond, we still maintain confidence in the 25% gross margin.
My interview with Ajay Scaringe, the Rivian CEO. Meanwhile, Tesla will release a software update to most of the cars it's ever sold in China due to an issue that could leave an unlocked hood unnoticed, creating a potential safety hazard. Tesla will deploy an over-the-air software fix to more than 1.6 million imported Model S and Model X vehicles, as well as Model Y and Model 3 that were produced locally. Okay, coming up, social platform X files a lawsuit about an advertising boycott. We have those details next. This is Bloomberg Technology.
I was shocked by the evidence uncovered by the House Judiciary Committee that a group of companies organized a systematic illegal boycott against X. It is just wrong, and that is why we are taking action.
That was Linda Yaccarino, the CEO of X, after the company filed a lawsuit accusing an industry group of violating antitrust laws for an advertising boycott that cost the social media company billions of dollars, it alleges in the filing. Let's bring in Bloomberg's Kurt Wagner. An advertising boycott sounds severe. Federal filing in a court in Texas. Just explain the very basic accusation that X is making.
Yeah, I mean, the claim is that this group, this industry trade group for advertisers, essentially, did anti-competitive behavior, right? They came out and they advised all the members of the group not to spend on X, kind of created, as Yaccarino said, a boycott of the business. And they're claiming this is illegal. Now, I don't know exactly what an illegal boycott is versus a legal one. But Ed, you and I have seen boycotts of not only advertising, but products all the time, right? This is usually the way that consumers or businesses sort of voice their displeasure with someone, which is what happened in this case shortly after Elon took over. I don't really know whether this lawsuit will succeed for them, but I think what they're doing here is sending a huge signal that, one, the business is struggling, they need to do something about it, but two, they're clearly picking a fight with the broader ad industry right now.
We're showing some more of the comments that Linda Yaccarino made. It was interesting, the video posted to X, Elon Musk amplified it. I guess the context is that X has been suffering in terms of revenue or financially in the period since Musk took over and Linda Yaccarino was appointed CEO because of this. I'm trying to understand why they would take action.
Well, that's exactly right. They're saying that, look, this group is, collectively getting everyone riled up to intentionally hurt X's business. Now, I think what's sort of interesting here is, what does this ignore? Well, this ignores Elon's own behavior, right, which we have talked about on the show several times over the last, couple years, right? You may recall, Ed, late last year went on stage at a conference and told advertisers to go F themselves, right? He has been very proactively aggressive to certain advertisers over the years. And so while they are saying, well, hey, look, this group is illegally creating this boycott, it doesn't take into account the fact that, some of this decision making may simply be because people don't want to work with Elon given the things that he's done and said to them.
Bloomberg's Kurt Wagner, thank you. I mean, a complicated story. There will be a legal process. We'll follow it here on Bloomberg Technology. That does it for this edition of Bloomberg Technology. Another busy day of earnings, fantastic interviews with executives from across the world of technology. Recap on the podcast. You know exactly where to find it on the terminal as well as on Apple, Spotify, and iHeart. Cue the beautiful pictures. This is Bloomberg Technology.